The Bajaj Group, a prominent conglomerate in the country, has been on a roll lately. With over 10 listed companies on the stock exchange, marquee players such as Bajaj Finance, Bajaj Finserv, Bajaj Auto, and Bajaj Electricals contribute significantly to its overall financial performance. Now, just last week, Bajaj Housing Finance made a splash with a bumper listing on the market. Shares of Bajaj were listed at a premium of 114% over the IPO issue price. And that's not all. Since then, it has surged almost 160% from its IPO price and crossed a market cap of 1.4 lakh crore rupees. Now, this strong debut is a testament to the group's financial health and investor confidence. However, not all news is good for Bajaj. Global brokerage firm CLSA has cast a shadow over one of the Bajaj Group companies' future, predicting a significant 40% downside in the stock price. Now, according to CLSA, Bajaj Auto may decline by 40% and it has maintained its underperform rating on the stock. So, what are the findings of the CLSA report? Well, the report mentioned a 40% downside for Bajaj Auto, with CLSA maintaining its underperform rating. Now, CLSA expects the share price to decline to 7,000 rupees per share. Now, in context, Bajaj Auto currently trades around 11,850 rupees a share, and a target of 7,000 implies approximately a 40% downside. But why is CLSA so pessimistic, you may ask? Now, CLSA's bearish stance is attributed to several factors affecting the company's performance and market positioning. Now, this assessment comes after the recent launch of two new motorcycles from the Bajaj and Triumph partnership, namely the Speed T4 and My 25 Speed 400. Now, despite these competitive offerings, CLSA believes that increasing competitive intensity in the premium motorcycle market and the general market moderation will impact the company's performance. Moreover, the 350cc plus category is dominated by Royal Enfield, which is a subsidiary of Eicher Motors, another listed entity. Secondly, CLSA believes that the stock's recent rally has pushed it to unsustainable levels with high valuations at a PE ratio of 41 times, making a correction imminent in this stock. Lastly, there is a moderation in the 250cc plus motorcycle segment as well, and continued pressure in the key export markets. Now, to provide a more comprehensive understanding of Bajaj Auto's situation, it's important to look at its financial performance. Bajaj Auto has historically been a strong performer with robust sales and profitability. Its sales have grown from 20,025 crores in FY13 to 44,870 crores in FY24. The operating profit margins have been around a healthy 20% mark. Looking at the bottom line, Bajaj Auto recorded a net profit of 7,708 crores in FY24, growing 26% from the previous year. Now, earnings per share for FY24 stood at 276.1 rupees per share. Now, however, exports witnessed a decline in both motorcycles and commercial vehicles compared to the previous year, particularly from markets like Africa and Bangladesh. Motorcycle exports declined by 9.8% and commercial vehicle exports dropped by 13.8%. Even CLSA mentioned continued pressure in the key export markets. Now, to conclude, moving forward, there are other factors to consider. The motorcycle market is highly competitive with players like Hero MotoCorp, Honda, and TVS Motor Company vying for the market share. Additionally, global and domestic economic uncertainty such as rising interest rates, inflation, and geopolitical tensions could impact consumer demand for motorcycles. While CLSA's prediction is a significant negative, it's not the final word on Bajaj Auto's future yet. Investors should conduct their own research and consider various factors before making investment decisions. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.